Hi there. So this is basically is fundamental or basic course for a beginner. It's like an introduction about the forex trading. So basically, what forex is the largest financial market in the world actually, and it allows you to trade the currencies and profit from the fluctuation of the price of one currency to another. Basically, it is Forex exchange, which is the short we call Forex. So, what you're doing in this particular foreign exchange, you're converting one currency into another currency. Like you're traveling from United States to Eurozone, like for instance, UK or any other places in the world. For instance, you're going to France, right? You are traveling from USA and going to France. Obviously, you're gonna need euro in order to spend money over there. So what you would normally do, you would just go to you know um, the exchange place at the airport or in the market where you can kind of exchange your US dollar to euro. And this is exactly what we are studying here. It's like a foreign exchange, the conversion of one currency into another currency. And that's what Forex trading is all about. And there is a fluctuation of price between two currencies. And because of this fluctuation, we try to capitalize on the movement and trade those currencies based on the strategies that I have. All right, so basically, it's uh, you're exchanging currency from one currency into another currency. All right, that's what forex trading is all about. Okay, so this is in a nutshell what it is. Okay, so currency exchange, like I gave you an example that you are traveling from USA to Europe, you can exchange your dollar from euros to make purchases, right? And like I said, forex trading allow you to make profit from the fluctuation of currency exchange rates. Okay, um, it is basically a highly liquid market. It is the biggest market in the world, as you can see. Um, it's like a $5 trillion dollar market. That is the average volume, daily average volume. If you compare with the other market such as New York Stock Exchange, it has only 22 billion. Then you have Tokyo Stock Exchange, which is 18 billion. Then London is 7.2 billion. So by far, it is the largest market in the world, and you can see how massive it is by looking at the volume size. So it provides you a lot of activities to profit from it. They are a participant in the in this market. They are key players basically. They are like banks, which are the the market movers. They are governments. They are institution, financial institution, corporation, trading. The forex market. And see, you can see the size of these big players. Like Citibank has a fairly large size. Barclay Capital has 11%. RBS also 6.5%. UBS, it's another bank, has 11% of the total volume. It has 11% share. Then by far Deutsche Bank is 18%. Then we have Morgan Stanley, JP Morgan. So these are the biggest players. These are the big dogs of the market actually that move the market. All right, and it is their primary source of income or business model that they make money out of it. So it is a huge market. As you can see, $5 trillion transaction are happening every day. Okay, so basically what it is, currencies are traded in pair. So this is how the currencies are being traded. So you have like US dollar slash euro dollar. So the first currency is US dollar. We call it base currency, right? The second currency is a counter currency or quote currency. So base currency is the pair. It is the currency that you are buying, right? If you want to buy a dollar, you have to, have a dollar as a base currency. The quote currency is like the second currency. It is like a currency you are selling. So you're buying US dollar and selling euro. Exactly what you do when you're exchanging, your uh, exchange rate, and when you are doing transaction. Okay, so remember these currencies are traded in pairs. So majority of the pairs are traded in US dollars. Okay. So these are the major currency pair, as I say. You can see right here. So these are the currency pair like euro, US dollar. Euro is the base currency. US dollar is a counter currency. So basically, you are buying US dollar, buying euro and selling US dollar. US dollar, Japanese yen. So it is also like traded in pair. Then you have British pound, US dollar. You have USD, CHF, then you have US dollar, Canadian dollar, Australia US dollar, New Zealand US dollar. So the first currency is the one that you are buying. Okay, so these are the currency that are basically a major currency, we call it, right? Also, you have to understand the trading metrics of the currency market. You can see the pip is the percentage in point. It's like a smallest measure of the currency movement. Okay, so like for instance, currency is coded into 4 decimal point. Like for instance, you have euro, US dollar, a pair. This is euro dollar. The price of the euro dollar is 1.230, right? And 2. This is like a selling price. This is what you want to sell your euro at. Then there is a buying price, which is 1.2304. So the last digit is called pips. So any movement of this particular last digit will increase the value of the currency, right? If this 4 become 5, there will be increase of 1 pip in it. And every pip has a value depending on the lot size you are trading. And the difference between the bid price and the ask price is called spread. This is what broker charge you to do the transaction, right? So that you can see like uh, this selling price is 1.2302 and the selling price is 1.2304. So if you minus from here to there, this is the spread. Like, so 2 point or 2 pip is a spread. This is what you will be charged by the broker when you are buying and selling. And this is the price you have to pay. Okay, so what lot size is all about? Lot size is basically the amount of currency you can buy. Like for instance, every thing that you buy has like a unit of measurement, right? If you are going to buy a milk, right, you say, okay, 1 liter milk. Okay, if you are going to buy like apple, you will say, okay, 1 pound apple or 1 kg apple. So that the unit is the denomination of how much you want to buy. So exactly the same thing here in currencies. We have 3 lot sizes. So you can only buy currencies in lots, meaning the standard lot is worth of $100,000. So you're buying currencies. If you want to buy euro, US dollar, so you're buying one standard lot, which is what you're doing. You're buying one lot, which is one standard lot that is equal to $100,000. Okay. Then we have mini lot, which is equal to $10,000. So if you want to buy a mini lot of euro, US dollar, the mini lot is equal to $10,000. Then you have micro lot. Micro lot is like buying a lot of $1,000. Then you have nano lot, which is very, very small, like $100. And you can see as the lot size increases, the pip value also increases as well. You can see every pip movement in a standard lot constitute to a $10 price gain or price loss. So if you're buying a euro and you have like a 10,000, $100,000 of, unit or one standard lot, if there is a 2 pip up move, you will be making $20 and you will be losing $20 in case of the price goes down. Similarly, in mini lot, every pip movement is $1. So price goes up, 1 pip, there will be a gain of $1. In micro, the which is $1,000, the pip movement is 10 cent, and in nano is the pip movement is 1 cent. Okay, so if you're buying $100,000 worth of euro, the pip movement would be $10 increase. $10,000, which is mini lot, the pip movement will be $1. Micro lot will be 0.10, which is 10 cent, and 0.10 in nano lot, which is 1 cent. Okay, so that's how the lot size is calculated. You have because it's a very very liquid market, so there are forex broker that provide you leverage where you can borrow money and you can invest in order to make profit. So for instance, there are brokers available which that provide you a different sort of like leverage. So like for instance, if you have start from here 150 to 1, like for instance, you have $1,000 in your account and your broker is giving you 50 to 1 leverage, meaning with $1,000 account, you can trade up to $50,000. You have purchasing power of $50,000, right? Uh, so the broker that offers 100 is to 1 leverage, meaning if you have $1,000, you can buy currency worth of $100,000, which is equal to 1 standard lot. Similarly, there are broker that offer you 150 to 1, 200 to 1. So basically, if you have $1,000, look how much money you can control. Very smaller amount of money that you have in your account. Okay, so at the same time, any pip movement, like for instance, you have like one standard law, you have $1,000 in your account, and your broker is providing you a leverage of $100,000, right? So any pip movement, one pip movement will give you $10. If there is a 100 pip movement, you will make $1,000 by investing only $1,000 and controlling this the high leverage purchasing power that your offer that broker offers you, right? So there is a huge potential that you can make money out of it, but leverage work both ways. If trade goes against you, you can also lose money as well. So that's why we have strategies where you are managing your risk. You're not putting all your money in one trade or putting all of your egg in one basket. So you kind of diversify, you manage your risk. But this is like an example of how much buying power or purchase power you can attain with a small amount of account that you have in your, in the amount that you have in your account. All right. So basically, how can you make money? Of course, you can make money, by fluctuation of the currency movement, right? Like I explained, like in this example, if you're buying $100,000 worth of British pound US dollar, and it is trading as 1.3150, and the price goes to 1.3160, which is like an increase of 10 pips. So like I say, $100,000 um, account lot, which is equal to a standard lot, 10 pip movement is equal to $100 profit, because each pip in a standard lot is $10. So you multiply $10 with 10 pips movement to the upside, and you'll make $100. If it is 20 pip movement, it will be like 200. If it is 30 pip movement, you'll be making $300. And it's inverse is true for if the price goes down or price goes against you. Okay, so that this is the beauty of forex trading, because you have been provided a lot of leverage from your broker, and you can basically control large sum of money with your small account that you have. You can also trade commodities in this market as well, such as gold. You can trade gold as well. You can trade silver, oil, wheat, sugar. There are a lot of opportunities that you can trade with. So there's plenty of opportunities to thrive into this particular market. Okay, so basically what it is, in order to make money, we kind of use um charts. We use chart in order to find out what trend the particular currency is trading. Is it in uptrend or downtrend or sideways trend? And we use different sort of candlestick patterns, volumes, moving averages, technical indicator. Actually, these are the tool that I'm using in order to predict the price. And we have a level marked up in our chart. And once price come to those level, we execute our trade, which I'll be explaining when once you enroll into the full course. Okay, how to read candlestick chart. Basically, you have candlestick chart, which is basically what we do. We are क्या जल्दी बोल बोल के आया हूँ, मैं रिकॉर्डिंग कर रहा हूँ यहाँ पे। मुझे एक गिलास पानी ला के दो, सबसे पहले पर्स ऊपर रखा है मेरे इसके अंदर, और हल्के हल्के आना इधर। So candlestick chart is developed by Japanese traders in order to predict the price. As you can see, there are two candlestick. One's on the left hand side, the other one on the right hand side. The left one is a red color, which is bearish. So basically, it has a component here. You can see four component of every candlestick. There is a wick, which is we also call upper shadow. This is the body of the candle. This is the lower shadow of the candle. So what happened when price open at this price point, like for instance, price open at $10, then price went all the way up to $15. But after going to $15, price started going to $5, right? And it also went down to $3. So there's a movement from $15 to $3. And if the open price is lower uh, than the closing price, it will become bearish candle, because price basically closed at $5 because it was open at 10, it went down and closed around this area. So that's why there is a loss of $10 or $5 actually in this particular candle range. Okay, so it has become, we call it bearish candle, because the price came from $10 and closed at $5. In the case of a bullish candle, what happened? The price opened at $5. It went down to $3. Then it went up all the way to $15, and finally it closed to $10. So open at the 5 and close at 10. So there is a gain of $5. So that's why this candle is bullish candle. So it is denoted in green color. So this is the beauty of understanding the candlestick. You would know what was the high price, low price. This is the body, and this is where the close was. So I normally use a candlestick chart a lot in order to do my analysis as well. Okay, so it is very, very important to understand that the charting software that I'm using is TradingView or MT4, which I will explain in the later section of this presentation. Okay. like this one. But these are the important candlestick pattern that I use. So what happened? This is what we call doji candle. So the price opened around like $10. It went up to 15, then went down to 5, then closed at where it was open. So it became neutral market. Basically, it's uncertain, right? So it's neutral. It opened where it and it closed at the same price level. This is the bullish hammer candle. So basically, what happened at one point, this candle was bearish. Price was at $5. The buyer came in and started pushing price to the upside to $10, and it closed at the higher price. So it's bullish hammer candle. This is a bearish hammer candle. So what happened? It is bearish because the price was at $10, for instance, and the seller came into the market. They started pushing this market to the downside, and price closed at the $5. So it became, bearish candle. This is spinning top candle, which is like, price open at, say, for instance, $10, but closed at $12. So it closed at, slightly higher than the open. So we call it like a spinning top. Okay. Risk management. This is the paramount of thing in currency trading. You have to, every time you are taking a position, you are using stop losses in order to protect your downside. They're also using appropriate position size, which I will explain later on. You have to know how much currency you're buying as per your account size. So risk is the very, very important. You should not be putting all of your account at risk. Just take risk like 1 to 2% of your account. Like for instance, if you have $1,000 account, you are using 1 to 2%, which is you are only risking 1% of that, which is $10, or 2%, which is $20. So every time you're taking a trade, you are only risking $10 to $20. If the trade goes against you, you will only lose 10 or $20, but your account will still remain intact, won't be significantly down. You can always make back that money. So it is very, very important you understand that the risk, how to control risk. And position size is also very, very important in order to do so. All right. Choosing a forex broker is also very important thing. You basically have, if you want to trade, you need to choose a regulated broker, which provides you a liquidity, which provides you, trading platform that has good customer support as well, regulated from any financial institution, financial regulatory body. Okay, so look into your country where you're trading, look which forex broker is regulated. Okay, so with forex broker, you open up an account, you deposit the amount in your account, and you start trading the forex currencies or commodities, or other asset class that you want to trade. Okay, so trend is your friend. Like I said, you have to know why are you trading, which way you are trading. So basically, I know I'm a big advocate of trading in a trend. So basically, in a trend, what happened is an uptrending market. So see, this is the market that is keep on going up. It's making higher high, higher low, higher high, higher low, higher high, higher low. So we want to trade in a trend. When the market goes up, we wait for the pullback. We mark our level. When the market comes back to our level, we execute our trade. We enter the trade and we ride the entire wave. Okay. Similarly, if we are selling, if we are bearish, the market has to be in a downtrend, like in this example. So price is making lower high, lower low, lower high, lower low. It is making lower swing high, lower swing lows. And in this market, we just have to wait for market to pull back to our level using our, a specified level. Um, and you use different sort of indication or indicators, not really like those indicator RSI, MACD, but like volume, as well as different point of interest in order to execute our trade. Okay, but it's very, very important that we have to understand what mode the market is in. All right. Okay. Okay, so like I said, getting started with Forex, so you need to understand you have to open an account with a reputable or regulated Forex broker. Then you deposit your fund into that particular account. Then select a currency pair. Like for instance, you want to trade Euro US dollar, you want to trade British pound US dollar, or you want to trade gold or silver. You select that pair and place a trade on your broker platform. That's how we execute basically our trade. Eh, these are the charting software that we use actually. It's a MT4 is a charting software that we use provided by the broker. You have TradingView, which I use basically for my all of my analysis. It's a free platform that you can use to analyze the market. All right, so thank you so very much for your time, and this is my uh, YouTube channel. It's called Password Forex, so do subscribe. Okay, so let's go back to the TradingView platform that I was talking about. So this is, you just type TradingView here, and this is the TradingView platform, which you can access for free. You enter right here. Obviously, you have my account already made up, but you use your Gmail account in order to, sign up for free. Once you're here in this platform, okay, so what you do is log in, and this is where you will be ending up. All right. Well, let me just give you a little tour of this particular platform here. Okay. All right. So this is the layout of this platform, right? So if you want to add, like for instance, if you want to add a currency, right? So you click on this plus button right here, or you can click over here, plus, right? You can do that. So either way, you can access it. So I'm gonna add right here, add symbol. So I'm gonna add, these are the option that I have. I have Forex, all the Forex pair are here, like Euro, US dollar, British pound, US dollar, USD, Japanese yen. I have indices as well. If you want to trade indices like NASDAQ, SPX. You also have stocks here. If you want to trade stocks like Apple, Intel, you can also trade. Since I trade mostly Forex and, gold, so I would stay here with the Forex currencies. Okay, so here it is. Now let me add, like for instance, I want to add Euro US dollar, so I select this one. It will be added here. British pound, select one. This one, it will be added here. So here are the symbols that I've added right here. Right here. This is the chart of Euro, US dollar. You can see right here. Euro is the first currency. US dollar is the second. So this is the base currency. This is the quote currency. These are the price right now. Bid and ask price right here. So Euro is being traded at this time is 1.0910. By this is the bid price and ask price. So 1.010912, and this is how much the spread is, 2 pip spread, right? This is the chart of Euro US dollar. Here you can add different timings right here. You add different time intervals. Like for instance, you can divide currencies into different time frames. Like for instance, D is for daily. So you click on this one. All right, so as you can see, each candle is 1 minute. So you can switch time frame back and forth, whichever time frame you like to prefer. In order to add the indicator, as you can see, I have added this in the bottom. There's a volume indicator right here. So if you want to add the indicator, you simply come to indicator right here. You click on this particular icon. You write down volume. Once you see the volume, you click here. It will be added right here. So volume will be added. Then I use this particular um, tool right here. If I want to use like a trend line, I can use tools from here. I can save it to favorite like so, like this one. It will be added right here into my palette right here. um, I also like to use the uh, these rays as well. Okay, I can add it to my palette here. Okay, so you can add whatever tool that you want to use. And this is a Fibonacci uh, retracement tool that you can also use. I've already added my tools right here. Okay, so you just play around with it and you would know what kind of tool you're looking for. Everything is available right here. Spend some time. There is plenty of videos available. On YouTube, you can check them out. It's just like a basic introduction that I'm giving you. Okay, so all the tools can be accessible from here. Like for instance, I like to use rectangle. So I go to this particular one, I click here and make it to my favorite. It will appear right here. So my rectangular tool right here. So if I want to mark my levels, I can use my rectangle tool and mark my level. Like for instance, because mostly I'm trading um, gold, I've already marked my levels here. As you can see, my level have been marked. You can see 4 hour, my level have been marked right here. I'm waiting for the market to come to this level for me to buy. I already sold at this particular level. So these are the level that I marked using this particular tool, which you will learn, later in the course, how to mark those levels and, different levels where you can expect price to, come and, give you some sort of reaction or, a reversal. Okay, so these are the basics thing that I use in TradingView. I do my analysis here in TradingView. I also have my MT4, which is right here. You can see is my MT4 platform where I execute a trade. Like I told you that your broker is going to offer you some sort of platform. So this is the platform I was talking about. So this is MT4 platform. Similar thing, you use this market watch where you can see all the currencies and everything. Once you have all the currencies, you click, like for instance, Euro US dollar. You click on this, right click, then you say chart window. New chart will appear right here. Okay, so new chart will appear. You can change the background of this chart by going to properties and everything. You can change the color and everything. All right, you can use this color scheme, black on white, so it will be changed. Just play around with this. Plenty of resources available. Similarly, it gives you a candlestick chart. So you click on this one. This is a bar chart. It will be converted to candlestick. You can see candlestick has been converted. Okay. Uh, Also gives you time frame. There's a daily time frame, which is like a candle that represent daily price movement. This is a 4 hour candle. Each candle represent 4 hour price movement. Then it's 1 hour. Okay. This is the window that you use in order to sell. So if you're selling, you click on this button like this. At this time, market is closed. I can't do it. You buy from here, or you can also do right click, buy limit if you want to buy. And you can sell as well. So this is how you execute your trade. So there are plenty of material available how to do that. All right. So this is how basically you execute your trade. You can use the same tool, like I said, a, a rectangle tool just to mark your level. Okay, trend line tool, you mark your trend lines if you want to use your trend lines. All right. So this is the tool that you use for the execution of your trade, which is basically, my broker is FXCM. So FXCM, my uh, account is connected with FXCM, MetaTrader 4, where I do my analysis here in TradingView. Soon as I see the opportunity, I execute. I come to this particular um, platform and execute my trade. Okay, so this is how what it is. There's so much available online. You just Google it or YouTube it. You will find plenty of resources. So this is like in a nutshell is basic introduction to Forex. I hope it was insightful for you. Or if you have any question, let me know. Thank you so very much. Have yourself a wonderful day. Bye-bye.